Even when using basic Fibonacci techniques with simple chart structures, it's still highly useful to take a look back to get a better idea of what's unfolding on the chart. To help choose from the most appropriate Fibonacci techniques and tools given the context. The context for this particular chart so far has been a steady downtrend, continually reaching new historic low prices, following some sharp peaks and volatility right after the IPO of this stock, which has been trading on the stock market for a relatively short time by this point. Even during such prolonged and sustained selling, it's natural to see these minor to moderate upward retracements. But even a series of constant upswings is not highly impactful in the broader context that consistently sees a return of price falling back down, plateauing, and continuing to new record lows. Now another moderate bullish reversal, retracing as usual with a fairly steady drop in price. In the shorter term context, this steady downtrend is beginning to reverse once again. The increase of bullish candles and volume over the past few days has taken place at the deepest retracement level. And this also defines the upper boundary of the bullish reversal range we saw earlier, that contains features of a triple bottom and reverse head and shoulders patterns. Given these features and the continuing progress of the current upswing, a distinct shift could be underway, leading to more potential for an uptrend with a greater impact. In more concrete terms, this means price is more likely to keep closing up into the 60s. Back at the site of those clear previous highs, where it's naturally possible to encounter more resistance. With more favorable bullish conditions now, in the medium and short term, surpassing the 60 range could be quite plausible. But of course, not always a complete guarantee, especially with more bearish candles forming, with immediate confirmation of price closing back down and returning under this upper threshold. That has so far been this range in the 60s. Despite this drastic drop, the chart is actually becoming even more bullish with this third upswing in a series of 3 now, taking place consecutively higher than the first 2. Since that triple bottom / reverse head and shoulders pattern, there's been a distinct shift in the broader context, which is quite visible in the longer weekly time frame. This is also visible to a lesser degree on the monthly chart. Now back to the daily chart for finer details, where similar to those peaks at record highs after the IPO price, we can reference some of these recent peaks to define the current and most relevant upper boundary. The other key feature is this stable uptrend line that has been formed from the 3 consecutively higher upswings, which adds to the bullish advantage of the jump in price over the past few days. Certainly, there are characteristics of an ascending triangle present on quite a large scale. With these clear structures marked, a trend-based Fibonacci time zone can be applied. Since the time zone is based on a fairly long duration, the result is wider intervals, but that can still be suitable since we're referencing these larger structures. So while we certainly can't pinpoint exactly where and when this triangle formation will conclude, the upcoming lines of the trend-based Fibonacci time zone can provide an approximate time range we can expect to see the results of this ascending triangle pattern, which from a bullish perspective will of course want to remain over the 64 level to improve shorter-term conditions towards the clearance over 70, heading towards the next interval of the trend-based Fibonacci time zone. Progress is slow and steady, consecutively closing higher with moderate volume, so definitely not a spectacular bullish break to continue the uptrend, though nonetheless the chart is firmly establishing up into the 70s. And now that the chart has reached the next interval, we can see over the past few weeks that was indeed the interval when the chart pattern concluded. That means we can now reposition the Fibonacci time zone to be more relevant in terms of finding out when this ascending triangle break could begin to slow down. Since this is such a clear chart pattern, the trend-based Fibonacci time zone and the Fibonacci retracement/extension can be based from the lowest to highest price we've been referencing. In addition to focusing on the 1.618 level, it's useful to construct a slightly wider range, such as around the 87 level when referencing that major peak from the distant past, along with the round number of 90. As price reaches this upper range, it's of course normal to encounter resistance upon approaching and contacting it. But remember, the intersection between the horizontal Fibonacci extension level and the upcoming vertical line of the trend-based Fibonacci time zone merely mark an approximate area when something significant could happen. Naturally, we'd expect resistance with price rising towards it, but it's also possible there could be a pause and/or bullish continuation. So it's also important to look at the short-term developments here with the candles to see if there's a decisive break over 90 or a sharp drop back under 87. In this case, bullish momentum quickly faded with the transition to a clear evening star pattern after briefly closing over 90. There was quick confirmation with price closing under this candle pattern's low and dropping well below 87. This bearish reversal of course happened before the actual intersection of the horizontal and vertical lines, but realistically it's close enough to the approximate area. The intersection just gives us a rough approximation, especially given the wider price range and longer durations used in this example. It would be less common and highly unrealistic to always expect the downswing to take place exactly at this intersection. That's why it's extra important to understand the broader context and pay close attention to those short-term developments when nearing the approximate intersection of the trend-based Fibonacci time zone lines and the horizontal Fibonacci extension levels. To get a better idea of the time range, it can be helpful to shift the trend-based Fibonacci time zone towards the later portions of the ascending triangle formation and use various combinations of positions, even add a regular Fibonacci time zone, and construct an approximate time range with the vertical lines that are close to the original vertical line that intersected with the 1.618 extension level from the first trend-based Fibonacci time zone.